Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about COMEC interim report. CSSC Offshore and Marine Engineering Group Company Limited offers a diverse range of businesses and services across various industries. Some of the key areas include defense equipment manufacturing, military ships, marine police equipment, public service ships, shipbuilding and marine products, feeder container ships, dredgers, offshore engineering platforms, wind power installation platforms, marine application business products, energy equipment, construction machinery, industrial internet platforms, metal and non-metallic shipbuilding, design and fabrication of metal structures, ship outfitting, manufacture and installation, removal and conversion, repair activities, engineering and technical consulting services, information transmission, software, and information technology services, equipment manufacturing for railways, ships, aerospace, and other transportation facilities, ship leasing, offshore wind power, ocean engineering, metal products, and machinery equipment. Repair. The company's extensive portfolio showcases its capabilities in various sectors, from defense to marine applications, shipbuilding, and more. The surge in COMEC stock price over the past year can be attributed to several key factors. A significant contributor was the company's exceptional financial performance in 2024, with a 20.17% increase in revenue and an impressive 684.86% rise in earnings. This robust growth instilled investor confidence, driving stock price appreciation. The strong interim results announced by COMEC in 2025 further fueled the upward trend. The company reported a substantial increase in earnings per share (EPS) of 258.42% and revenue growth of 16.54%. Additionally, positive analyst ratings and industry outlooks, including CMBI Securities' recommended rating for the shipbuilding sector, bolstered investor confidence. The shift from loss to profit has also been viewed positively by investors, contributing to the rise in share price. These factors collectively point to a period of strong financial improvement and positive market sentiment that propelled COMEC stock price, including significant rallies like the 44% rally in 2025. The primary drivers of revenue growth or decline can be identified through a review of the financial summary provided. On the growth side, the shipbuilding segment saw significant increases in revenue, with a total of plus $9.43 billion from external transactions. The steel structure and ship maintenance segments also experienced growth, while other segments contributed an additional plus $197 million. In terms of specific drivers, sales agency fees to China Shipbuilding Trading Co., Limited, increased by 54.6%, letters of guarantee rose by 140.3%, and financial institution handling fees surged by 269.4%. Geographically, revenue from external transactions in China grew by 24.9%, while other countries saw a more modest increase of 2.1%. On the decline side, sales of steel structures, supply of utilities, and provision of design and technical services experienced decreases. However, these declines were relatively small compared to the overall growth seen across various segments and regions. Overall, the data suggests that revenue growth was driven by increases in key areas such as shipbuilding, agency fees, and financial institution handling fees, while regional growth was led by China. Net income and profit margins underwent significant changes in the given period. Net income increased by a substantial 258.46%, primarily due to government grants and gains on financial assets. However, this increase was partially offset by losses from asset impairment and decreased net income from operating activities, which dropped by 29.7%. Profit margins also experienced fluctuations, with gross profit margin decreasing from 79.23% to 75.89%, and operating profit margin declining from 78.51% to 74.19%. Despite these decreases, the overall trend suggests that profit margins likely improved due to increased revenue and reduced costs. The company is generating a significant positive operating cash flow of RMB 1,530,898,629.05. This consistent trend across multiple pages confirms that the company's operations are producing substantial amounts of cash, indicating a strong financial health and ability to meet its obligations. Management's outlook and strategy. The company plans to conduct foreign exchange derivative trading with a balance of up to $5.761 billion from 2024 to 2025, aiming to mitigate the impact of foreign exchange fluctuations on the group. This strategy is expected to reduce cash flow requirements at maturity through net settlement of derivatives. Management continues to evaluate key assumptions and uncertain factors that affect estimates, which may lead to significant adjustments in the book value of assets and liabilities in the next accounting year due to target cost, income tax, and defined benefit plan obligations. The company operates in 4 main business segments, with management periodically evaluating operating results to make informed decisions about resource distribution and operating result assessment. The company has a history of paying dividends to its shareholders. In fact, it has been confirmed in multiple sections of the financial summary that dividends have indeed been paid. Specifically, for the first half of 2025, the company distributed RM 113,080,510.24 per 10 shares to all shareholders. This indicates a commitment to returning value to its investors through dividend payments. Concerns about inventory buildup and supply chain disruption. The financial summary highlights 2 major concerns: inventory buildup and potential supply chain disruption. The data suggests a significant increase in inventory levels, with a 22.35% rise noted on page 12. This trend is consistent across multiple pages, 124, 175, and 181, indicating a persistent issue. Furthermore, the supply chain appears to be experiencing difficulties, as evidenced by large equipment being received in batches for inspection and acceptance, page 90. The increase in total accounts payable aged over 1 year, RMB 2,787,010,347.85, on page 108 suggests that suppliers are not being paid promptly, which can lead to supply chain disruptions. Additionally, a decrease in procurement amounts, page 163, may indicate inventory buildup or supply chain disruption concerns. The significant increase in accounts payable, RMB 885,889,457.74, from the beginning to the end of the period, page 179, further supports these concerns. These findings suggest that both inventory buildup and potential supply chain disruptions are pressing issues that require attention to mitigate their impact on the business. That concludes the financial summary for COMEC. Feel free to comment below, and I will be happy to answer them when possible.